Welcome to Stock Talk with Nico Kritikos. Today we're going to be going through Zillow stock, ticker ZG. This is a stock I've owned for a while now. I started buying it a little bit too early. As you can see here, my cost basis is $72 a share, and I have 50 shares of this company. I originally bought this, I want to say, back in October around $90, and then it spiked up, and I thought it was just going to be an upward trajectory from there. I wasn't expecting them to cancel their business of flipping homes. They stopped doing that last fall. And since then, the stock has completely plummeted because, that's going to take away billions of dollars of revenue from their top line. And they, in 2021, they did they did $8 billion last year. They're expected to do a little under 7 next year. Or 2022, they're going to do a little under 7, and then 2023 they're going to do about 2.7 billion. So that's the big reason for the stock price decline. But they reported earnings this past week, and the investor presentation came out, and after looking through that, they gave some decent guidance, and they gave a little bit more of a plan and explanation of things. So that kind of the stock shot up 16% or whatever that day right here. So a little bit of confidence is slowly starting to come back, but we still have a long ways to go. So I'm really just looking to get, I never really sell a stock for a loss. That's why I haven't sold out yet. I still think it's, it'll easily be over my cost basis in a year or two from now. So that's what I'm going for. But let's go through, I'm going to show you what happened in the investor presentation, and we can start with, so here's some of the things they're saying. Housing is a growing industry with $300 billion in transaction fees. That would be their TAM, their main TAM. And because they talk about going into other business models as well. And this was the most interesting thing that I'm basing my case off of, and my stock price prediction for the next couple of years is for 2025. In three years from now, they're saying their target is $5 billion of revenue with a 45% adjusted EBITDA margin. That margin is a little bit, that what they're aiming for is a little bit higher than what it is now. I think today for 2021, it's about 39%. So that 45% is just a slight increase. And the $5 billion in revenue is a big increase from, if they're saying they're only going to do 2.7 billion next year, then that's a big jump. But if you look at it from the perspective of they did 8 billion this past year, then it's not looking too good. But there are some other things that this company has going for them that is kind of gives them a competitive edge over the competitors, and that kind of keeps me interested in this stock. So the other thing is, there's a couple of people that I know who have, deal with Zillow or real estate agents. They don't really have anything good to say about using Zillow. So that's one small concern, but that's just a small problem here. So this is what they're going for. Zillow is trying to create a housing super app. Now, some of the other companies some of Zillow's competitors are companies like Redfin. Okay. They pretty much do the same thing. And you also have Opendoor. Okay. So you have several different companies doing what they do. But this is where it's going to get interesting. So Zillow they want to make money through all these different things, allow people to find houses, rent them, get them pre-approved, have them tour, have them buy the house, finance it, sell it, blah, blah, blah. Then if we move on, this is where it gets interesting. So you could see that Zillow, compared to their competitors, if you look at active app users among these apps, Zillow has 3 times more than the nearest competitor of Realtor.com. So Realtor.com is a popular one, and so is Redfin. So those both are dramatically below. I wish they had the numbers for, see, this is for real estate marketplaces. I wish they had the numbers for Opendoor on here, but they don't. So moving on, we have some other things here that I would like to point out. And that is, so here, this is some different ways they make money. You can see average revenue per customer. They make the most through mortgages, $9,000 through mortgages, but there's also, different things they can make money off the consumers from. This is also interesting. This is breaking down the different ways they make money. As you can see here, the premier agent introducing customers to a network of agent partners. That is their main source of revenue right now, $1.4 billion last year. But then some other things like their mortgage part of their business is growing 45% over the past 3 years. So there's other things that are, growing fast and catching up. So that's what another nice thing with this company is they have multiple different sources of revenue. And I believe there is one more. See, so this is their model for how they're expecting to achieve $5 billion in $5 billion in revenue for 2025. And I believe that is it. Here's their management team. A lot of their executives have worked at other big companies, so that's a good sign as well. And I believe that it is. So if you look at something like this, Zillow is more searched on Google than the term real estate. That's interesting. That's a big moat for them. And yes, I believe that is it. So now we're going to get into Nico stock market checklist. You can see the notes I highlighted here were, once again, their targets for 2025 and traffic to Zillow's group's mobile apps and websites in Q4 of last year was 198 million average monthly users. That's really big. That's a big deal. And then right now we have a market cap of $14 billion and the balance sheet has $5.4 billion of equity. That's always something I'm interested in seeing, the relationship to the equity compared to the market cap, because let's say a company has, so like this is a good example. Let's say Zillow is going to be growing. Let's say they grow revenue 20% last year and then 20% 3 or 4 years from now. Well, even though it's the same growth rate, let's say they're doing the same revenue numbers, then if the equity is much higher years later, though, then the market cap should be much higher. The stock price should be higher, even if they're doing similar amounts of revenue, just because of if they have a higher number of equity on the balance sheet. So that's something to look out for. But this is what I'm saying. This is for a $14 billion market cap, 5.4 billion of equity is really good. That's a lot. That's more than a third of their market cap is on their balance sheet and equity. That's a really good sign. That means this company is not very it's at a fair value right now. But okay, so the stock is down. That gets a yes. Revenue increases, definitely get a yes. If we want to go back here and look at what the revenue has done, we can see it's grown very nicely over the last couple of years, but the net income is what is struggling. That is the main problem. They keep losing money. So see, revenue has gone from 1.3 billion, 2.7, 3.3, 8.1, and now it's probably going to come down for these next upcoming quarters. And see, they had 2 profitable quarters at the first 2 quarters of last year, but then we're back to unprofitability. Then if we keep going, price to sales, healthy price to sales for this year is good. It's very cheap. And I also put it for a price to earnings, because they have the price to earnings metric, a forward PE of 36. That's extremely low for where it's traded at in the past. And they're expected to more than double their EPS for 2022. That's also a good sign. Price to sales, 2.3, dramatically cheaper than where it's been at in the past. Once again, you got to think those, the revenue is going to be decreasing over the next 12 months, which is not good, but you just got to, it's only a temporary thing. It's only for this next 12 months. And after that, it should, revenue growth should take off from there. And then finally, we have innovative, or do they have a moat? I put yes for some of the reasons I mentioned earlier with, compared to their competitors, they have so many more users. They have 200 million monthly active users. That's a huge deal. And I think they have the market share is like 25%. They own a quarter of the market. And then you have like how popular the brand name is, how much the Zillow is associated with buying homes and selling homes, especially compared to the other ones like Redfin or Open Door. And so I think they're in a good place. And the housing market is so big. That's such a big TAM for them to, so many different ways to make money. It's hundreds of billions of dollars. So even if they can get, 10% or something, they could have that's how they can get to a 30, $40 billion company. Next up, once again, this is a growing industry. Some of their segments are growing, over 30%, which is great. And then the housing industry typically, goes up whatever 8 or 9% a year. Return on investment and margins are not good. They're negative. Same thing. The end cash position for this company has been getting better, but operating cash flow is not good. So that's the main problem with that one. Diverse revenue streams, how I said that gets a yes. Balance sheet looks great. This is something that is special to see when you can have an unprofitable company, but with a strong balance sheet, there's more assets and liabilities. And how I said earlier, that the equity is very high compared to the market cap. It's over a third of the market cap. And then the equity has also been increasing the past couple of years. They do not have a strong share buyback. The number of shares increased like 9% from last year. They don't have a dividend. And then another good thing that is not great is the insiders don't own a lot of the company. They only own a couple percent. So they only own 3.6% of the shares are held by insiders, but the institutions own 90%. And you see Vanguard, Morgan Stanley, BlackRock on here. ARK Invest used to be a big buyer of this one, but ever since in the fall when they announced that they are they're not going to be doing the home flipping and the revenues numbers were coming down, then ARK started selling. And I know I watched ARK buy this stock when it was over $100 a share. So I know there's a good chance they lost some money on this one because they were buying this stock when it was expensive. So I don't know. It's kind of interesting how that all played out. But I think ARK Invest I wouldn't be surprised if they started buying back into this at some point in the future, maybe a couple of months from now. But I think this is, I'm partially, and then let's see, finally, here's my last, so we have, is it founder-led, good management? I showed you the management at the end here have all worked for some other big companies. So that's always a good sign. And so they get a 13 out of 18, which is considered a buy. But finally, this is where I get my price prediction from. We have the years, the revenue, the growth, price of sales, and market cap. So for 2022, they're expected to do $7 billion of revenue. And right now it's trading at a price of sales a little bit under 3. And so see that's where we'll get our market cap of around 21 billion. Hopefully by the end of this year. And then 2023, it's expected to get even worse. I have a feeling that's a low number. Hopefully it'll be, more towards 4 billion, but they'll have to come up with some new ways to make money and hope that the growth kicks back in, hope that the real estate market is strong. And so that's where I'm seeing a price of sales of around a 5. So I don't, it bottomed out at what? It bottomed out at $45 a share. And I'm hoping it doesn't go underneath that. I don't think it will, but we'll have to see. And then what else do we have here? We have 2024 revenue of $4 billion. This is a 33% increase. This is when it's going to start picking up. Price to sales of 6 is very fair. I think it's, I have a steady increase, 5, 6, 7, 8 in the price to sales. I think it's very reasonable, very conservative. That'll put it at a market cap of 24 billion. And then eventually this is their number, $25 billion of revenue for 2025. And a price to sales of 7 is definitely realistic. So that'll be a market cap of 35 billion, which will equate to $135 a share or 250% upside in the share price from here until 2025. If it shot up, and if it within the next year, if it shot up to $75, $80, I would probably sell some of my shares and then keep the majority of them for the next couple of years. But we'll see where the share price goes. But that is my full analysis for Zillow stock. Let me know what you think down below, and I will catch you in the next video.